So welcome to this week's MoneyWeek video, and in this week I'd like to take on a topic that the Chancellor, George Osborne, took on last week, and that is stamp duty. Okay, a couple of people have asked me about it, and it's a regular bugbear at MoneyWeek. So, what is stamp duty? What did George Osborne do about it last week? And what do we think, or what do I think, he should have done instead? All right. Now, first of all, what is stamp duty? It's a very old tax in the UK. It's paid by the buyer, and it's paid by the buyer of only certain assets. They need to be registered. It is a sort of re-registration tax, if you like. So the idea is that when you buy certain assets that have a register of ownership, classic examples that people tend to know about in this country are shares and property, obviously two different types of register there. When you buy either a share or a property, you pay stamp duty to the government at a certain rate. Now on shares it's fixed at 0.5% of the purchase price. On property there's a kind of sliding scale, which I'll talk more about in just a moment. Okay. Now the concept was supposed to be in the old days when this was dreamed up, if you like, and then extended by Gordon Brown, but the idea when it was dreamed up was this was a tax that used to be set at quite a low threshold that would cover the cost of re-registering the fact you were now the legal owner of an asset. All right, because that sounds like it's a bit more hassle. You don't have to re-register ownership of other assets, for example. All right, if I was to give you a £10 note, there's no register of £10 note owners. I just hand it over. Okay, same with a bag of oranges. But with shares and property, right, there is a register, and the cost of re-registering assets was, I think, the original conceptual justification for stamp duty. And documents of ownership were kind of stamped, tax paid. Right? So that's where it sort of came from. So you can sort of see why governments thought it's quite a sneaky way, a transaction tax, quite a sneaky way, given the number of shares and properties that change hands, to raise some revenue. And indeed it does raise some revenue. Now, George Osborne did the right thing in a way. Okay? He has gone after stamp duty and abolished it in two areas, one of which made the headlines, the other one is slightly more hidden, but people are realising now. The headline grabbing move was, he said, on growth shares. Now in this country that's going to tend to mean London Stock Exchange AIM, Alternative Investment Market shares, and shares on something called ISDX. You come across that one. So growth shares, from now on we exempt stamp duty. There will be no 0.5% paid by the buyer, okay, to the government every time you buy that type of share. Like that idea, like that a lot. Get rid of stamp duty. Now, that's not to say that 0.5% off the purchase price should have everyone rushing into the AIM market. There are some quite illiquid, potentially frankly dangerous small companies trading there. You've got to know what you're doing. But I like the idea of removing that inefficiency from the market, that thing that's slowing down transactions. Okay, I like that idea. And if you're thinking, well, the government's going to lose revenue, not really, because the increase in activity, the removing that tax and the sort of indirect tax revenue that will be brought in by such a move should, in theory, at least compensate. All right, so I like the idea of taking inefficiency out of the market. The other thing he did, a little bit of a techie point coming up here, I won't labour it because in other videos I explain these fund structures, but another thing he did was he removed stamp duty reserve tax, as it's called, that's normally paid when investors redeem, sell back if you like, units to UK domiciled unit trusts and open-ended investment companies. So to turn that to plain English without too much jargon, he removed stamp duty on a certain type of quite popular UK fund. So I'm liking those two moves. All right, transaction taxes where possible should be eliminated, but I wish he'd gone a little bit further. How could he have gone further? Two proposals. Okay, and no doubt these will draw some views, and do feel free to send them to me. Number one, why just stop at AIM shares? Why not abolish stamp duty on all shares? Okay, because it's an inefficient tax and it reduces the competitiveness of the UK Stock Exchange. Now, this is a point that's been made several times by obviously the London Stock Exchange, but also the likes of CSFB. Okay, they've done studies that show that the UK is the second most expensive exchange in Europe to transact a share-based transaction on. I think it's second only maybe to Ireland. All right, there are other exchanges, I think Norway, for example, where transaction taxes are precisely zero. All right, so by having that tax in place, you reduce the competitiveness of the UK exchange. All right, there would be more deals going on at a potentially higher value if you took that tax away. And that's an argument I tend to agree with, and with London being so important to the UK economy, that is an argument that I like. So, nice start, George Osborne, but would have been nice if you'd gone a little bit further. More contentious still, stamp duty on property. Now here, there isn't a flat rate of 1%. Those people who've bought a property will know there's a kind of sliding rate. Sure, buy a property up to £125,000 value, and as the buyer, you pay nothing. All right, but above that, and let's face it, in London in particular, that doesn't buy you very much. Okay, above that, you start to pay a lot more. So if you're talking about 125 to 250, then you're talking about 1%. Get over 250, it's 3%. 500,000, 4%, 1 million plus 5%, and so it goes on. Right? So you can be talking about a lot of money at the higher end of the market gone to the government up front as kind of dead stamp duty. Now, my point is this: I don't necessarily have a conceptual problem with taxing property per se. Okay, but if you're going to do it annually based on value or something like that. And maybe in another video, if you're interested, I can look at ways that could work and the pros and cons. But don't do it as this kind of cumbersome, lumpy transaction tax that puts people off coming into the market at all. Because as a first-time buyer who saved a deposit, you're suddenly thinking, well, crikey, I've got to write a cheque to the government for potentially thousands of pounds. Right? So don't do that. And also don't clog up the existing market with a transaction-based tax. Do it, if you're going to do it at all, based on what people already own and potentially you could argue therefore could afford to pay. Right? So conceptually, I don't like stamp duty. And then even if I did like stamp duty conceptually, there are things that are wrong with it anyway. I mean, Gordon Brown fiddled around with stamp duty. He was a great fiddler and kind of made things quite messy. Let me give you some examples. Number one, the thresholds where stamp duty kicks in on property haven't moved since they were changed largely by Gordon Brown's government. Okay, so for example, you're paying 3% on properties of 250,001, I think to be technically correct, and upwards in value. You're paying 3% stamp duty. All right. Now, inflation, house price inflation, okay, since that was introduced many, many years ago, would mean that in theory that band where that tax kicks in at 3% should be more like 675,000 as a property value. But it's just not kept pace with house price inflation. So it's kind of a aggressive, sneaky stealth tax, basically, this one. And there's some other foibles as well. One of them being, why does it jump at 250? What's magic about 250,000? Presumably it was significant once, but it isn't really anymore. Why does it jump from 1% to 3%? I mean, say you're a first-time buyer, fortunate enough to be looking at a property worth, just over 250,000. Suddenly you're thinking, well, hang on a minute. If it was a little bit cheaper, my stamp duty bill would be like a third of what it would otherwise have been. Okay, so there's some kind of quirks in the system like that. And as I said at the start, I just don't agree with the tax that fundamentally, if you're trying to get a property market to sort of move and stay liquid, why bung it up with a transaction-based tax? Okay, so in a nutshell, stamp duty is kind of regressive, it's kind of inefficient, it's transaction-based, and unlike the EU, who want a kind of Robin Hood tax on financial transactions, I don't like it. I like it in principle, don't like it much in practice. So I agree with George Osborne that getting rid of it, wherever possible, is a good move. Just a pity he kind of bottled out of doing a proper job on shares and didn't turn his attention to the property market while he was at it. I look forward to seeing you next week.